You've probably seen the ads, right? Spot loans. They promise fast cash when you're in a bind. But are they a helpful lifeline, or are they a financial trap just waiting to spring? Well, today, we're going to figure that out.
Okay, picture this. Your car just died on the highway, or maybe you get a medical bill in the mail that you totally weren't expecting. You need money, like yesterday. It's in moments just like that where the idea of a spot loan starts to sound really, really good. But what are you actually getting into?
So, first things first, what in the world is a spot loan? Let's start with the basics and get a clear definition. Okay, a few key words here. It's unsecured, which just means you don't have to put up any collateral, like your car title or your house. They approve you based on your credit and your income. And it's an installment loan, so you'll pay it back over time with a set number of payments.
And here's their main selling point, the big appeal: speed. The whole process is incredibly fast, almost completely automated. You can apply on your phone, get an answer in literally minutes, and have the money in your bank account in just a few hours. It is purpose-built for I need it now. Probably the easiest way to wrap your head around a spot loan is to think of it like credit card debt. It's unsecured, you make regular payments on it, and just like a credit card, you really want to make sure you pay it back on time.
All right, so now that we know what we're dealing with, let's get to the most important part of all of this, weighing the good against the bad. Is all that convenience really worth it? On the pro side, it's all about speed and easy access. The application is simple, you get cash super fast, and you can often get approved even if your credit isn't perfect. But, and this is a huge but, take a look at those cons. These are some serious red flags, especially that first one, the extreme interest rates.
And this, right here, is the catch. The massive, unavoidable catch. We're not talking about slightly high interest. It is shockingly common to see an annual percentage rate, the APR, of over 300%. Just let that sink in. That means for every $100 you borrow, you could end up paying back hundreds more in interest over a year. It's astronomical.
And that brings us to a really heavy word you hear a lot with these loans: predatory. See, a lot of critics argue that these lenders know that they're approving people who might have a really tough time making the payments. And if you miss a payment, the interest and fees can snowball so fast, you get trapped in a debt cycle that is incredibly hard to break out of.
Now, you might be sitting there thinking, hold on, this sounds an awful lot like a payday loan. You're not wrong. They're definitely in the same family, but there are a few key differences we need to talk about.
Okay, the biggest difference is how you pay it back. A spot loan, as we said, is an installment loan. You make smaller payments over time. A payday loan, on the other hand, is basically an advance on your next paycheck. You're expected to pay it all back in one huge lump sum, which can be a real challenge for a lot of people. So a spot loan gives you more time to pay, but that crazy high interest rate is ticking away the whole time. All right, time out. We need to hit pause here and clear something up, because this gets super confusing. You might have heard the term FHA spot loan if you've ever looked into buying a home, especially a condo. I'm here to tell you it is a completely different thing. And here is the absolute most important thing to get. An FHA spot loan is not a loan at all. It has nothing to do with borrowing emergency cash. It's a spot approval that helps someone get a mortgage on a single condo unit, even if the entire building isn't FHA approved. So why does this term even exist? Well, for about a decade, you couldn't do this. But back in 2019, the rules changed, and it opened this option back up for home buyers. It just makes it easier for someone with an FHA loan to buy a condo, giving them more choices. Think of this spot approval as like a fast pass. It lets an individual buyer skip the long, complicated, and frankly, pretty burdensome process of getting the entire condo building certified by the FHA. So, same name, spot, but two totally different worlds. Okay, let's bring it all home. We've talked about the quick cash spot loan, and we've cleared up the confusion with the FHA condo approval. So let's get back to the main question. What's the final verdict on using a spot loan for an emergency? Before you even think about hitting that apply button, you have to be brutally honest with yourself. Ask these questions. Can I really pay this back fast? Have I looked at every other possible option? Even a credit card cash advance is often way cheaper. Do I truly understand what this is going to cost me when all is said and done? And if you're wondering why the interest is so high, well, this is it. From the lender's point of view, they're taking a huge risk. They're giving money to people with no collateral, often with shaky credit. That insane APR is how they get paid for taking on that level of risk. So,
It all comes down to this one question, the one only you can answer for your own life. The convenience of a spot loan is undeniable when you're in a jam, but that convenience comes with a potentially massive, massive price tag. Is that trade-off worth it? That's the bottom line.